What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tomorrow is Father's Day. So happy Father's Day to all of you guys out there with kids. Um, I appreciate y'all being here, man, and I hope you have a wonderful day tomorrow. Okay. Now, before we get into these charts, I just want to remind you, all right, there's only two types of trades. All right. We're looking for dump and pump scenarios or pump and dump scenarios. All right. There's only two types of trades. Another way we could say this, right, is we're looking for either reversal trades or continuation trades. But at the end of the day, every single trade that we take is going to be one of these two options, either a dump and pump or a pump and dump. And to make it a little bit more specific, all right, we're looking for a dump, coil, and pump, or a pump, coil, and dump. And think about it like this. If we're looking at a pump and dump, right, when the market starts to pump up, we're making higher highs. We're in an uptrend. And then at some point, that trend is going to exhaust, which will be evident by the coil sideways. Okay, so when we pump up and then we begin to coil sideways, that's evidence that this trend is exhausting, right? We're failing to continue to go higher. And now we're coiling sideways and we're looking for the market to begin to dump in whatever session we're trading, all right? Now, no matter what, every single trade you take is going to be one of these two options. This pump and dump could take place over the course of multiple days, or it could be on the day itself over the course of multiple sessions, or it could be in the session itself over the course of multiple hours. All right. But either way it goes, it's going to be one of these two simple templates. All right. So remember that. Don't complicate this any more than you have to. Okay. And you don't have to. So don't do it. Keep it simple. All right. Just remember, you need to know what you're looking for. Pump and dump or dump and pump. Anything else is a garbage chart and you need to look somewhere else. All right. We always want to overcomplicate our trading. I don't know why. Okay. But it's just the nature of the brain, I guess. All right. But at the end of the day, trading can be relatively simple once you know what you're looking for. The hardest part is sitting on your hands. And I don't know why it's so hard, but you just have to trust and have faith that one day, okay, one day this week, there will be a day that is more obvious than all the other days, okay? And all you have to do, your job as a day trader, is to simply wait, okay? Sit on your hands and wait for that obvious day. If you can do that, you will be successful. All right. Now let's take a look at some of these charts from last week. Here we're looking at gold, and we're looking specifically here on Wednesday, okay, maybe Thursday, but really here we're just looking at the general structure, all right, because on Wednesday, that was a news release, 2 p.m. So that's late. It's outside of our timing window, but the structure that we're paying attention to is still there. We're still looking at the pump, coil, and dump type of movement in the chart, okay? And the previous week, you can see the dump, coil, and pump, all right? Very simple stuff. This is what we're looking for, okay? So if you see this market puts in a peak formation high and begins to dump, all you have to do is sit on your hands and wait for that trend to sort of exhaust itself, begin to coil sideways. And all you have to do once it coils sideways is mark off that coil, wait for it to break out of one side, pull back, and continue. All right? That's as simple as it has to be. It doesn't have to get much more complicated than that. Of course, we have specific entry criteria. Entries seem really complicated, But we'll look at some ways to simplify that in this video as well. But with this chart here in particular, I just want you to look at the structure, the shape of this chart, right? Pump, coil, dump. And you can see that this actually takes several days to play out until completion, right? The same way that this one took several days to play out to completion. And this is just the way that the market moves, all right? It does this nonstop. That's why Stacy tells us the market does the same thing over and over and over again. The true variable is the trader. That's the variable. Can you sit on your hands until you see an obvious setup? All right. Now, of course, you have to know what you're looking for. Understand your own trading personality. Are you short bias or are you long bias? Do you like continuation trades? Do you like reversal trades? Once you figure it out, which one sticks out, to you easier, then all you have to do is sit back and wait for that to happen and don't trade no matter what in between the time. Okay. Now here we're looking at the NASDAQ, all right? And we have a very nice pump, coil, and dump. And you can see this takes place over the course of 2 days, Monday and Tuesday, all right? And multiple sessions. We have Monday's New York session that sort of gives us that pump. We coil sideways from Monday's late New York session through Tuesday's Tokyo, London session into New York, where we kind of break out of the high and then dump. Okay. But there it is, pump, coil, and dump, right? Now, when we look closer at this chart, this pump, coil, and dump, okay, we have this peak formation low that is put in place that begins this pump before we start to coil sideways, okay? Now, when we see that peak formation low, that can automatically be thought of as your potential target for the pump and dump type of trade, okay? Easy as that. There's your target. Once you have that target, you know you're looking for a short trade and you want to see very specific things happen before you enter the market for this short trade. Those specific things are right here where we break out of the previous day's high. You can see we have these 3 peaks, right, working into that high. Here's our 10 o'clock timing window at that red horizontal line. After 10 o'clock, we have our entry criteria met and we're able to get in this market. Now here we're zooming in right around, right in the session, right in the New York session timing window, right? Specifically at 10 o'clock. Remember this red line is 10 o'clock. We have 3 peaks, okay? A head and shoulders type of pattern, right? But when you look close here, we have these EMAs crossing over. The EMAs are coiling together, okay? For advanced traders, or how Stacy says, savvy traders, this is where your initial entry can be in this coil, all right? This is an M pattern. This is a 5-minute chart. Okay, this is a 1-minute chart. So there's our M pattern. You're entering at the break of that middle structure of the M, or you can take a more conservative entry down here once we break this level, right? And you're just in the market. You're targeting the opposite side of that range, and look how clean and crisp this move is, right? So if you know exactly what you're looking for, you just wait for it, right? Now, here, the euro US dollar on Thursday, we have the pump, coil, and dump. Now here, I want to sort of talk to you about a little something different. This, for me, really helped me to simplify my trading process, okay, me personally. And this is not from Stacy. It's just something that through Stacy, I've been able to sort of put together on my own, okay? So we could see the previous day had this very large move down, all right? So we might expect that downward move to continue, right? But the way that price moves, right? It doesn't just go straight down. It's going to have an impulsive move down, then a corrective move up, and then an impulsive move down, then a corrective move up, right? There's always going to be a pullback, right? And we've talked about this before on your daily charts and any time frame really that you're looking at, but specifically your daily charts, right? Every single candle on your chart just about is going to have wicks on one or both sides. So what that means is that if we're going to have 2 days that close lower than the open, right, we can expect an upper wick to be formed on that candle. And what that upper wick represents is a portion of intraday price action that takes place above the opening price or above the previous day's closing price. So those wicks, they're not just simply the high or low of the day. What what they really mean to me is that if we're going to go lower, I can expect the current day to pull back inside of the previous day's range before continuing lower, right? And you can see we get this peak formation low right here and we start to pump up. As soon as that happens, this low becomes a target for me, all right? And I just want to see us pump up above the previous day's closing price and then reverse in a session timing window. And you can see how this happens, right? Here's our peak formation low. We pump up, start to coil sideways, and then our reversal takes place in the London session on this London pair. And again here's our EMA crossover, our EMA coil, right? Where those EMAs get really tight together, okay? This is a 5-minute chart. We have this big pin hammer candle there, right? Large wick up there. The EMAs are crossing over. We're closing below the EMAs. You're in the market, right? And you're targeting that anchor point, right? Stop loss is up here at these structural highs. Your take profit is down here. Easy trade, okay? You put it in, you walk away. You put it in, you go take a nap. Come back in an hour or two, see where you're at. You understand what I'm saying? Trust the process, okay? You see how clean and clear this pump, coil, and dump is? That's what you're looking for. Whether it's taking place over the course of 3 days or it's only taking place over the course of 3 sessions, it's still all the same, all right? And then let's look at the opposite case when we're going higher. And these are a form of continuation trades. On the day itself, it may be a reversal trade, but on the higher time frame, it's a continuation trade. You can see that the previous day obviously closed up high at the extreme. Right? It's a close and breakout. There's only really 2 options after a close and breakout. We're either going to close and breakout, work up high, reverse, and then go lower, or we're going to work down low, reverse, and continue higher, okay? And I really like these types of trades when there's a peak formation that takes place close to the end of the previous day. Like this one happens right before the close of the day. This one happens right before the close of the day, right? Right before that rollover into the next day. But again, here you can see the market closes, then we dump down below that closing price, reverse in a session timing window, continue higher, targeting that anchor point, right? Anytime that we put in a peak formation high and start to dump down, I'm automatically thinking of that peak formation high as my target, okay? And then I know I'm looking for a reversal in a session timing window, right? If we zoom in again here, okay, and we pay attention to the time. I don't have the time on here, but you can see here's our 3 a.m. hour. Our EMAs have coiled tightly together. 5-minute chart. We're closing above those EMAs. You're just getting in the market. Stop loss down here. Targeting that high. Easy trade. Put it in. Walk away. You understand what I'm saying? Make your trading really simple. I'm not in here reading every single candle. I'm looking at the outline of the chart, the profile of the chart, the structure of the chart. I know what I'm looking for. It's either a pump and dump or a dump and pump, and it's as simple as that. Okay. We're using session timing windows, right? 12 candle windows. If you're looking at a 15-minute chart, like Stacy always is talking about, all right? We're looking at those session timing windows. We're looking at the EMAs, all right? And that's it. That's it. You understand what I'm saying? So I hope this video helps you out. I hope it makes sense for you. I'm trying to make this as simple as possible. And again, happy Father's Day to my fathers out there. Enjoy the day. Until next time, I hope you continue to free your mind.